Hello and welcome back to Trading Day. Good to have your company. Let's have another look at how the market is faring this afternoon. It's at 6,017.9 points. It is down 0.6%. As we head up to the close. Well, looking abroad now, and China's economy is performing well for the most part. Recent manufacturing PMI beat expectations, and it's interesting, the growth rate is still expected to sort of slow at around 6.5%. Well, for more on this, Claudia Kwan is an investment analyst with Morphic Asset Management, and she joins me now live in the studio. Claudia, good to see you and meet you.
Hi, Helen.
You've just been to Beijing and you've travelled there and worked there over the years. How are you seeing the economy there overall with an investment perspective hat on?
Yeah, I mean, the economy there is doing largely quite well, as you suggested. The PMI is over 50, which implies it's still in expansionary phase. We've seen the China steel futures hit 6-month highs, underpinned by strong demand. So it's largely going well there. I think the recent inclusion of the A shares on the MSCI global indices is an important milestone, albeit not near-term impactful for markets. I think at the margin you'll see foreign participation start to increase. And
yeah, so this is quite a big change, isn't it?
It is. I mean, the inclusion rate was 2.5%, which means for MSCI EM, the weighting is actually less than 1%. And the impacted flows was just a little over 1 day's trading volume. So near term, it doesn't imply a huge impact to markets. But if we get to 100% inclusion, and if you take into account the Hong Kong listed shares and the China listed shares in the US, the ADRs, that actually accounts for 40% of MSCI EM. And, you know, it took Korea and Taiwan 6 to 9 years to get to that point. But at the margin, which is what markets move on, I think China is increasing its influence on a global scale.
I suppose one of the other big factors that a lot of investors have thought about China, and I mean this is a bit blunt to say this, but that, you know, can you trust the companies and can you trust the way the market works and that sort of thing? So have you seen changes there?
Right, a key factor from one of my CIOs, Jack Lowenstein, is that key factor. And that is one of the key differences we've seen in China recently, is a focus on quality growth and a increasing tolerance to let companies fail. So you saw that in the supply side reforms, where you saw consolidation and weak resource companies disappear. And you're now seeing it with the increasing corporate bond defaults. So in 2017, 21 companies defaulted versus 1 in 2014. And that number is expected to increase.
So meaning they just let them go, but isn't there a lot of damage when they do let them go?
Well, that's the key debate, I think, in China at the moment, is whether or not the regulators can let this happen in an orderly fashion, which the base case is, or does it cause a systemic risk where you see multiple companies go under. But the overarching view at the moment is that this is actually very positive because it makes the bond market pricing much more appropriate, much more effective, and that companies and local governments cannot just keep relying on the central government to pick them up.
Yeah. So how does that make you sort of change your view as an investor? And also, I mean, a company like Morphic invests in ethical, you know, does some ethical investing. How does that work with Chinese companies?
Right. Well, at the margin, it's absolutely positive for us. We see positive developments in all the ESG, the environment, social and governance aspects. The central government is very focused on the environment, and you see it coming up in their infamous 5-year plan, some very aggressive environment targets. Socially, they're trying to curb the imbalance of lower-tier cities, which we've seen through the establishment of the high-speed train network.
But, sorry, Claudia, they will still be using a lot of carbon-emitting power. They will still be building those sorts of power stations that still pollute their environment.
Absolutely, I think, but at the margin, you're seeing the conversion. I mean, the gas companies. I mean, the news out in the Australian media today of the Chenkong bid for the gas and oil pipelines.
APA.
Yeah, APA, and recent news where the Chinese regulators are actually looking at putting all the 3 big petro company gas and oil pipelines as one, is showing you that they're quite committed to moving from coal to gas. So we're not saying that China's perfect in any way, but at the margin we're seeing an improvement. It's making environment, social governance investors like Morphic, it provides a lot more opportunities for us under this.
So would you invest? Are you investing?
Yeah, I mean, one of our key holdings is China Everbright International. It's
China?
Everbright
Oh, yes,
International.
Everbright. Yes, we've talked with Jack.
Yeah, it's
Chad.
it's an environmental sector play. It largely does waste to energy, and this is a company that ticks all our boxes. They have access to funding, they have strong corporate governance, and they have a strong social factor there, whereby they're taking waste, urban waste, and producing energy. So I've frequented their plants a couple of times in China, and we're quite optimistic for the opportunity for that company.
Yeah. All right. Look, it's a most interesting one, and we'll no doubt talk about it again. But for the moment, Claudia Kwan, thank you very much for joining us from
Thanks a lot.
Morphic. Well, we are going to have a change of pace now with consumer.